morning, everyone, to all our listeners. It's a real pleasure to welcome you to our webinar on the tokenization of real estate. Thank you to the New York City Real Estate Expo under the superb leadership of my longtime colleague, Anthony Kazassis, who's a real trailblazer in the real estate event industry. Anthony has his pulse firmly on the latest trends and developments in the industry. And through the pandemic, has filled the void by organizing these webinars and virtual networking sessions. And he just told me we're looking to come back live in person in New York City around middle of November. Stay tuned. My name is Harry Dublinsky, founder of the business advisory firm Wilson Park Group, where I advise my clients and manage my investments. I'm a CPA businessman with over 25 years of experience in the real estate industry. I'm very pleased today to introduce another good colleague of mine, Yael Tamar, who's the CEO and co-founder of SolidBlock, a leading real estate tokenization company. Great resume, what she's doing. Yael is a recognized leader in property tokenization, an early mover in the blockchain space. And just the organizations that she has, she serves at the helm of, I think I'm saying it right, Yael, FIBREE, Foundation for International Blockchain and Real Estate Expertise. She's a founder of Women in Block and she's had over 100 blockchain speaking engagements and an educational podcast program. I'm always amazed that, Yael could end up in Dubai, then she's in Miami, and spending a lot of time in New York. So she really understands from a global perspective what's happening in the marketplace vis-a-vis, crypto, tokenization, blockchain. Yael is also recognized as a top 20 Proptech Influencer, as one of the top 25 blockchain and crypto speakers, and top 100 women in blockchain. Yael, quite impressive. And as the global executive based in Tel Aviv and New York City, Yael leads the SolidBlock team on the mission to lead real estate tokenization. Welcome, Yael. It's great to have you with us today.
Thank you so much, Harry. Thank you so much for having me. I think these conversations are very timely and very important because we definitely need for community to be involved in these types of conversations. Number one, because people like me who are on the forefront of technology, we create these tech solutions solving a problem. And most of and the only way for us to innovate and the only way for us to actually offer a solution that is useful to the community in the real estate world is by hearing feedback and about, really, and first of all, hearing about issues, right, that could be solved with different technologies in the real estate space. And second of all, does the solution we offer, truly offer value, and what can we do to offer even more value? So I think it's very important. And I know that we mentioned that we don't have a lot of time for questions, but what I would really appreciate for the audience to do is if you can maybe write down your questions, write down your questions in the chat, and also contact me after on any social media platform, me or Harry, and let us know what you think.
That's great, thank you. So let's set the stage, Yael. What is the total addressable market for tokenization? Where are we? I guess here in the US, we say, what inning are we in?
So first of all, the real estate market globally is around $300 to $320 trillion, right? So that's just basically the value of assets in this in the real estate asset class. Now that includes, single family, commercial, and so on and so forth. Now that's just the value of real estate. Now imagine there's also on top of that the market for let's say lending, all right, private lending that is collateralized by real estate. So the market is actually even bigger, right? And in terms of the tokenization, what it is, first of all, and then where it should be applied. So this $300 trillion market is very illiquid. So these assets are largely non-tradable and also inaccessible for investment for most people. So about 1% of that 300 trillion, which is $1 trillion, is traded publicly through REITs, right? Real estate investment trusts that are on public exchanges. And so anybody here can go on their brokerage account and buy a piece of that real estate, right? So that's just 1%. What about the rest of them, right? How can you get involved in the rest of them? So with the real estate investment trusts that are public, you can buy and sell, right? You can buy and sell at any time on the public exchange. Now, there is another chunk of real estate, roughly 20 to 30 billion, that is an investable commercial real estate. So these are your projects on crowdfunding websites that you can go and buy through CrowdStreet or Yield Street or Cadre. These are projects that your friends here in Harry's group might send around and gather additional LPs to put some money in, right, in the project along with general partners that are investing, right? So this is basically the way that people access, investors access investments nowadays, right? And there's of course a way to access through funds, right? So maybe not real estate investment trusts, but other types of private funds where you can put the money in and they will allocate the money, right? So these also exist, and access to them is usually word of mouth, right? And track record. So that real estate in that category is usually not tradable. So once you put your money in that project, you are there, and you may receive dividends or interest along the way, but you are at the mercy of the sponsor of the project in terms of when you're going to see your money back. And if you are in urgent need of liquidity along the way, not only it's a difficult process to get your money. It's true that some private REITs do have a redemption program where you can, after about 3 months, receive your investment back, and while they find another buyer for your shares, and they will usually determine the price, right? So they will determine the price. You will not have a say in terms of whether your investment has increased in value. So, but in the majority of these investments, you do not have a way to sell or to trade. And not only that, you also don't have a way to collateralize that investment like you can do with brokerages and like you can do with your house, right? And go get a loan against it. So if you did a fractional investment in an asset, you don't have a way to access, to use it as a collateral. And so that's very limiting. And that's why real estate market has remained largely antiquated with respect to financing solutions, right? So really what you have as a sponsor, from that side and at your disposal today is, obviously bank lending, non-bank lending, private equity, right? And finding investors, right? Either through personal connections or crowdfunding platforms, or possibly investment banks, right? So, and that hasn't changed in many, many years. And so other markets like corporate equity and have been, kind of flushed with solutions and options, right? So, and so what we came here to change that. This 99% of the market that is liquid and inaccessible, now we have blockchain technology that allows you to tokenize real world assets. And not only tokenize assets, you can tokenize fractions of assets. You don't have to put all of your asset on the blockchain. You can just basically select a certain value on the capital stack of the asset and decide, okay, these $20 million as a part of my equity, let's say of $100 million, I'm going to allocate $20 million and make that accessible to investors, not only for buying, but also for selling. And not only for buying and selling, but also for collateralizing and borrowing against. And all of these things are now accessible because this 20 million of the capital stack is a part of a blockchain economy, or you may even say Web3 economy. And I'll be happy to kind of go through in some basic detail of what those operations include, how they assist both real estate owners and investors. Whatever else Harry wants to know.
Well, that's good. I think let's start with the basics. When I speak to, let's call my bricks and mortar crowd, they ask when I say tokenization, they say, what do you mean? Bitcoin? You mean, some know the word Ethereum and all that. So starting at a basic building block, what's the difference between cryptocurrency and what we're seeing out there with Bitcoin versus a digital security or token?
Okay, absolutely. So let's first of all start with the word token. And that's not a new word. It just basically means a digital version of something, right? It could be in computer science, it's a digital representation of some sort of a software asset. In other languages, it's used for to talk about some sort of a payment mechanism, like at a Luna Park, for example. So in the blockchain world, it's very similar. As far as cryptocurrency history, Bitcoin came around in about 2009, if I'm not mistaken, maybe 10. And it was a revolutionary concept. That was the first ever cryptocurrency. And the reason why it was so revolutionary is because before Bitcoin, there was not a reliable way to transfer value, whether it's a monetary value or information or anything like that, without a central party, like a bank or Venmo or PayPal or anything like that. So, for example, if I wanted to send Harry $100 and I'm here in Israel and he's in New York, I'm going to have to either do a wire transfer or maybe PayPal. And in both these situations, my bank is in control of my balance. So they will subtract $100 from my balance sheet and notify Harry's bank of doing the same in the opposite direction. They'll add $100 to his balance sheet. And without the banks, I could easily send the same $100 to someone else, right? So there's double accounting or triple or whatever, right? So, and PayPal works in the same way, right? There's just one entity that is centralized and then, deals with the balance. Now, Bitcoin was revolutionary because it utilized the power of the crowd or processing power of many computers around the world to send value across the chain from one person to the other, where the whole network will look at my balance, they'll check whether I have the money, then they'll subtract, and then they'll look at, and first of all, they even will see if I exist, right? If the wallet is correct, right? And then they will look at Harry's balance. No, I don't need to see his balance, but they just add $100 to his balance. And then they send a order for the network to update the record that's online, right? That's for everyone to see that the transaction actually took place. And that was revolutionary because you don't need a central party. And the network does operate on fees, right? But the fees are distributed across the network. It's not one entity that's getting the fee, right? So by the way, whenever people are talking about the transaction fees and how high they are, they just don't realize that credit cards also have transaction fees and that usually the seller is the one absorbing the 2% transaction fee. So there's always a transaction fee, just the question of who gets it. So that was crypto. Now, beyond Bitcoin, there was a lot of other currencies that came out. The major ones are Ethereum, and there were a few that recently failed and caused the whole, crash in the system. So every once in a while, there are different currencies that come out. They usually are used for transactions, right? They're usually used for sending money across the system, and that's or store of value, right? A lot of people are keeping cryptocurrencies as kind of as a fund for themselves, right? Waiting for them to grow in value. And so that's cryptocurrencies. Now, on top of that, there are tokens, right? So the token is basically an instrument that is used, that gives the person that owns the token some sort of value. So it's not only for transferring money like Bitcoin, but it's actually representing an asset usually, right? An asset, or it could represent a right to an asset or a right to a product. So for example, I could buy a ticket to a conference, and I could buy a token that represents my ticket to the conference and use it at the time of the conference. That's a utility token. There is a utility in this token. And then there is a security token, which is what we do at SolidBlock. And the security token is basically a digital version of a security. So tokenization is basically a two-step process. It's first of all securitization. We create the security, absolutely traditional process in the US. Usually the Reg D 506C type security is very popular, and that's what we use. And that allows any accredited investor to invest in a securitization in the project. And then when they do invest, they actually once they put the funds in, there is automated system that is governed by a blockchain smart contract. It's called a smart contract, which means once you send the money, you get the token. Now, what is this token? It's basically the same security that we issued, right? It's a compliant security according to US regulations in the US. If we're doing this in the US, then it's according to the SEC regulations. So once you put the money in, you are now possessing this security. But in addition to writing your name in some sort of a database, or you getting a PDF, approval that you're now the owner of a number of shares, you also are written in a blockchain database. And blockchain is immutable. You cannot change it without the whole system seeing and the whole system approving. As we mentioned, it's running on the same principle. Bitcoin was the first ever use case for a blockchain. And then blockchain, and then the world discovered that blockchain can be used for many, many things, right? That you can actually record securities on the blockchain. You can record titles on the blockchain. You can record corporate ownership on the blockchain. There's a lot of things that blockchain is used for. And in our use case, it records the ownership. Why is it good to record ownership on the blockchain? Well, very simple, because you don't need a centralized party to trade. If you have a digital security, you can sell it to anyone you want, as long as they, of course, fulfill certain criteria, like for compliance, namely KYC, AML, and accreditation, right? So, but you are free to trade this. You don't have to wait for the owner of the project to sell the project for you to see your money, right? So that's just one of the advantages. There are many others, but this is the simple one. The trading is the first basic advantage, and that's tokenization.
Well, that's great, thank you. So how do real estate owners and investors benefit from tokenization? You referred to the traditional way: investor and LP interest signs a subscription agreement, has a paper interest there, and is pretty much put into this liquid situation there. So what benefits would you say to owners, investors who may be skeptical at this point, at this juncture, as to why should they be really looking into tokenization as a viable option for them?
Right. So let's look at talk about the benefits first, and then we'll talk about why. So the benefit is to the investors is obvious, so because they get liquidity. The benefits to the real estate owners is that number one, they get a product that is easier to market and that is more flexible, right? So they're giving a huge advantage to their investors. They're getting a big competitive edge. They also open themselves up to possibilities of blockchain economy, because if they tokenize also their own interests, right? The GP interests, they actually can borrow against their own assets from DeFi, what they're called DeFi lenders, decentralized finance lenders. These are pools of capital that are created by individuals that lend against assets. So you get a big advantage of just having more liquidity. There are various sources of liquidity out there. One of them is selling to LPs, another is lending, and yet another is something new that we're doing in the market, and it's becoming very popular, is putting your asset as a part of a structured product, of an index of some sort. And once your asset is a part of a bigger picture, like a REIT, it's the same thing. It's, if you think about it, why are REITs interesting or successful? Because they're aggregation right? If you just have one asset that's $10-20 million in value, it's less interesting than you have an aggregate of 200 million, right? Because then it's becoming interesting for institutions, it's becoming interesting for public exchanges. And so all of these things are much more flexible in the blockchain Web3 environment. So those are advantages to asset owners and any company that has assets on the balance sheet, really, right? So there are also situations where you have a company that owns real estate, right? The company that does something else that has real estate, maybe it's an insurance company, they have real estate on their balance sheet, and then they experience liquidity risk by themselves, right? Because they own assets. If they bring limited partners and this blockchain structure and the fractional investment or fractional sales for them as fractional sales, they can still keep the asset on the balance sheet because maybe they have mortgage that they still owe, right? And diversify and be able to sell assets quicker under tough economic environments.
But Yael, SolidBlock is not new to the game. Can you refer to your experience with Aspen, the Aspen coin and all that?
Sure, I would love to. And I just remembered you asked about why anybody should jump in the game. I'll quickly explain that. Basically, right now, there've been quite a few tokenizations done, and usually they're done by larger funds and larger institutions. And so again, it's unfortunate in my eyes that these tools are used and benefit, kind of more larger players, and smaller players that actually probably need these tools even more, are on the sidelines. So I think that one of our goals at SolidBlock is to really educate the public about the benefits of blockchain finance. And that's why we're doing webinars. That's why we're here, is because we need to see more asset owners to participate in this. And in terms of our project with Aspen, we were the first in the space to actually tokenize and provide blockchain smart contract service, tokenization service to a commercial real estate asset that was on the market, right? So this asset initially needed some renovation funds and recapitalization and to increase occupancy. And they initially considered initial public offering because the investors that wanted to come in requested liquidity because they knew that they wouldn't see their money for a long time, given that this is a landmark and everybody, wants, on the one hand, everybody wants to invest, but on the other hand, basically the liquidity here is very beneficial. So IPO was very expensive and they scrapped the idea of an IPO. Instead, they found SolidBlock. We were one of the only players at the time, if not the only one, that offered real estate tokenization service and platform. So we put together a smart contract for that deal. It was $18 million raise, and basically for about 19% of the equity in the resort, in the Aspen St. Regis Ski Resort. That was raised very quickly via two broker dealers and distributed into all the investors' wallets, and subsequently was listed on an exchange that's called T0, and it's not trading there. And it's in my mind, it's a very, very interesting and successful use case because also during the COVID times when the resort needed a boost, right, it basically gave their token holders an opportunity to come and stay at the hotel at a discount. So you can also use these tokens as kind of a key to unlock various benefits.
That's great. And that was around 2018. So that SolidBlock was really a pioneer in the space.
Right. Yeah.
Oh, that's terrific. Can we turn our focus now on the whole regulatory environment? We hear about crypto. There's a very active SEC commissioner, Gensler there. There's issue about regulation. How does this fit into the tokenization space? Where is there commonalities? Where are there not? And before you referred to I'm Yael KYC and then AML. Maybe for the benefit of our viewers, you could define that and give them an understanding of those key terms.
Sure. So number one, there's definitely regulatory uncertainties for the crypto market and at large, and that has to do with the fact that, of course, any new asset class that comes into the market, it has its risks. Number one, because regulators haven't had the time to review and make decisions on how to tax them, how to protect investors, and so on, right? So the SEC is now spending actually a lot of time on the digital securities and digital assets and regulation. And Gary Gensler, of course, is the chairman of the SEC. And so with respect to digital securities, this is a different space where there is no question about what the asset class is. It is a security. It needs to comply with securities regulation. So those regulations largely exist. Now, there are different regulations that needed to be put forth for trading, right? Because that's relatively new, blockchain trading. The trading overall of the security has been allowed since the Jobs Act in 2012, and that was the government legislation that allowed for fractional asset owners to be trading. And that was one of the ways to encourage investment in small, medium enterprises, right? So, which it actually did, right? And basically, even the government acknowledged that making assets liquid is going to help these assets get invested, right? So, one of the SEC regulations regarding securities is that every buyer needs to undergo KYC, know your customer, AML, anti-money laundering, and also accreditation, meaning making sure that they are accredited investors. And so basically, that's what our platform does. Automatically, every investor goes through all these processes so that we could comply. But in general, this field is pretty straightforward in the US. There are certain parts of the trading world and the custody, which is basically how these tokens are held, which was a little bit in limbo in the last year or two, but now has been resolved, and US, started issuing licenses for that custody. So, we're in a good shape with respect to being able to use blockchain to benefit from real estate transactions.
That's great. And just since you're basically you're speaking globally, are there certain markets where you're starting to get a stronger reception towards tokenization? Like, where does the US stack up in comparison to the other countries in Europe, in the Arab states that you're dealing with on tokenization?
And that's a great question, Harry. So actually, the US is not too far behind. The only place where, because of the regulations that were more forthcoming and just also the regulators themselves are probably less, I would say, vicious as sometimes the US regulators could be. Asia has really been in the forefront of this development. Many assets have been tokenized, many funds have been tokenized. Trading has been done on exchanges there, probably in larger volume than in the US. But in terms of anywhere else, the US is at the forefront, more so than the Middle East, actually, because the Middle East is following kind of the European lead on regulations. And in Europe, they didn't have an equivalent of the Jobs Act that allowed tradability and allowed issuers to basically issue their own securities and even solicit investors, as long as the investors are accredited. There's no equivalent regulation actually anywhere else. And that's why I think the US really is at the forefront of private offerings. And you can see that easily in the statistics. I should look them up. I will for the next webinar. But I've seen this before, that the US in terms of private offerings is the definite leader, and you can see that. So I think this is probably the best place for us for tokenization. The second market could be the Latin American market, and we're also there. We have quite a few partnerships in the Latin American market now.
I see our host is back. Hi, Anthony.
Hi, Harry. Hi, Yael. Yael, very, very nice. You know, very interesting. We learned a lot. I learned a lot. And I really want to thank you for coming on. I will make a copy of the chat questions there so I can send to both you and Harry. But also, again, we will be giving the attendees' names over to you today. So you could thank everybody and also ask anybody who wants to ask Yael and Harry questions, more questions. Yeah, you can. They will be sending out I also posted up how you could reach them over here on chat. But again, they will be sending out a formal thank you letter with their information and their contact information, as well as their websites. This concludes the webinar. And again, once again, thank you, Yael, and thank you, Harry. Take care, guys.
All right.
Bye-bye, guys.